All right, welcome everyone to the Trade Speakeasy and to our evening with Winston Buckley from MetaRise. It seems there's a bit of a lag. Is it lagging for you?
Okay. Slightly, I'm good.
Welcome everyone. I know that, the last week has been crazy with everything going on with Silvergate and Bank and then the Silicon Valley Bank, and just the ongoing relationship between crypto and equities, and the fact that those of us who were trading last week trying to figure out, what the fallout would be, how deep the repercussions would be, what the relationship would look like, and just trying to get a feel. And it was very strange towards the end of the week, as we saw a significant drop in the indexes. There were a lot of underlyings that I was watching, and I expected that we would see that maybe we would see things snap back in place, like energy to go back into more of a bullish run, and for gold to also get a pop, which it did. And we saw yields run on bonds. And so some things seem to go back into the normal relationship that we're used to across the markets, but I'm definitely trying to figure out, what the deep fallout would be for crypto. What does this mean for crypto, being that this whole thing with Silvergate was such, it was such a reputable bank for the crypto space, and then trying to figure out where things go next. I know that for many of the Trade Speakeasy members, this is a key topic that's a hot topic that's of interest to them. But I know that you are going to talk a lot about that. So instead of sharing too much about the kind of global macro and like my thoughts on the banking sector and what potential contagion this fallout with Silicon Valley Bank could have for just the general financial sector, I'll let you go ahead and share with us your thoughts in the space, and then we'll hop back on together. So, and I'll be watching the chat for any questions.
All right, thanks, Suzanne. Thanks for having me back on. This is an area that is near and dear to my heart. Not just speaking about crypto, but I used to work in banking as well. So to see what's going on now and the time that I used to work in banking from 2003 to 2009, there are some things that I'm seeing that are repeating themselves from that time period, and also some things that are repeating themselves from a few years ago in crypto. So yeah, definitely want to get into that. It's a wild time. It's exciting. It's a little scary too, and I'll kind of weave in some of the things that I dealt with over the past few days, dealing with this fallout and this contagion from all the banking stuff. So I will go ahead and get this screen shared, and give me a thumbs up if it's good on your side.
Yep, perfect.
All right. So if y'all don't mind, like and subscribe here on this channel. And if you want to follow some more crypto stuff, that's my link tree and where you can find me elsewhere. So this presentation is titled Crypto's Liquidity Crisis. This is all boiling down to what's available and what's not. So I am not a licensed financial advisor. Please make sure that you go out and seek your licensed financial advisor for any advice. I can't give you anything. I'm just a guy on the internet. This is for your educational purposes only. Please do your own research. So take a screenshot of that and tread carefully. So this is the news of the hour, of the day, of the weekend, of the week. The banks that have been collapsing over the past few weeks. And there are some other banks that are in trouble. But if you didn't know about some of these banks, the second largest bank in US history has collapsed this week. So the largest obviously happened in 2008 with all of the recession stuff that happened during that time, during the Great Recession. But the second largest, which was Silicon Valley Bank, collapsed this week. And so this here is saying that it happened in 48 hours, but there are a number of events that happened before that. Let me make sure. Suzanne, am I frozen on your side? Just want to make sure that we're good.
Okay, now you're back.
I'm back. Okay. Not sure what happened there. All right. Sorry about that, y'all. So as I was saying, Silicon Valley Bank, they collapsed, went into just a full out bankruptcy by the middle of the week. And the FDIC basically has control of that bank at this point. They became insolvent in a matter of hours on Thursday, and Silvergate Bank shut down days before that. So we have these banks that are shutting down because of liquidity that they don't have. They've been having to sell off assets in order to honor the request for deposits or withdrawals that customers have been making. And we'll pause and talk about that and why that happened. But a lot of crypto companies, a lot of blockchain companies use both Silvergate and Silicon Valley Bank, amongst some others, but a lot of capital was stored at these banks. And so obviously that's going to have an impact on the crypto market if these crypto companies can't get access to liquidity. So here's some stats here. BlockFi, which is now defunct and in bankruptcy, they had $227 million with Silicon Valley Bank. Circle, which is the one that is causing the most concern, has $3.3 billion with Silicon Valley Bank. Now, this is such a concern because Circle, or USDC, is the largest stable coin in the US, and it's the second largest by market cap in the world. So obviously, this is a big deal to the crypto market because it represents such a large share of the overall crypto market. And whenever people are trading and they want to go into a safer asset, then they will a lot of times go into either Bitcoin or a stablecoin. And a stablecoin is basically something that's pegged one-to-one to something else. It's usually a dollar. You might have stablecoins that's tied to euros where you are, or whatever your local currency is. Usually stablecoins try to maintain a peg to represent one-to-one to whatever dollar or asset that is tied to. So Circle's USDC is tied one-to-one to the US dollar. And because they couldn't get access to this funding from Silicon Valley Bank, then there was a bank run on the USDC, on that stablecoin. So people started to withdraw that quite rapidly. And as a result, let me not put the cart before the horse. I'm going to get into that. But as a result, there has been some depegging there. But out of Circle's or USDC's total market cap at the time has gone down, but they had about $43 billion total in all of their reserves, but $3.3 billion was in Silicon Valley alone. So quite a large share of their funds. And it's not just crypto companies. Pantera, Avalanche, Yuga Labs are crypto specific, but Google, a lot of tech companies are have their funds with Silicon Valley Bank. So this is not just a concern in the blockchain and crypto space, but it's also a concern for tech overall. All right, now the contagion continues. Again, we talked about Silicon Valley Bank, and this is what has happened. Now, I say the contagion continues because if you don't, or if you can't see my shirt, SBF owes me money, so SBF is saying bank me free. A lot of this stuff is a result of the collapse of FTX and the ripples that is continuing to have in the crypto and blockchain markets. But what happened over the weekend up until now, and this is a little outdated, crypto moves very fast, but this is the market cap of USDC. So that stablecoin that I was speaking of. So the market cap was a little over $44 billion yesterday, and it quickly dropped down to about $37 billion. So people were just trying to withdraw their USDC. Also, people were trying to trade out of their USDC. So they were going from USDC to USDT, for example, and that's just Tether stablecoin, or they were just trying to go to another stablecoin. Or a lot of people actually were going into Bitcoin because they're feeling like Bitcoin is a safer asset than a stablecoin. And as a result, Circle has they pause withdrawals or redemptions on the USDC. So right now there's a pause on it. A lot of decentralized exchanges and centralized exchanges have either halted the withdrawals on the USDC or the liquidity pools are basically just dried up. So you can't even trade out of it, even if you want to. So that happened very quickly, very, very quickly. And this is the DPEG that I was just talking about a few minutes prior. So as you can see, it's supposed to be 1-to-1. And this has been this way for, over a year. I think USDC came out a couple of years ago, and it's been pretty flat. It's always either 99 point something or $1.01. But as you can see, in a matter of hours, it depegged and it got as low as to about 88 cents at one point. So obviously, if something is depegging, then the company, so Circle, is going to do whatever they can to try to mitigate any further losses. And this is what happened with Terra Luna. We talk about FTX and Sam Bankman-Fried quite a bit, but this is what happened last May with Terra Luna. The peg lost and it went down. It just never could recover. It went down so fast, they were not able to recover and do what they need to do to bring it back up. Now, this was earlier today, about 9 a.m. Eastern Standard Time. It has since gone up, so it's about 95 to 96 cents. It's kind of fluctuating around there. It looks like Circle has come out with some news stating that they're doing some things and they work some things out with Silicon Valley Bank to where people are going to be able to get some redemptions on Monday morning. And I think Silicon Valley has said something similar. So it's caused a little ease in the market, and it looks like people are starting to move some funds back there. But this may not be, it is a big deal. Don't get me wrong. It is a huge deal, but BlackRock actually maintains a lot of the reserves for USDC. So I would imagine that BlackRock is probably going to do whatever they need to do to make sure that this doesn't go down. And not only that, USDC is the biggest stablecoin in the US and the most regulated stablecoin in the US. And so this was the depegging amount earlier today. It was about 92 cents. And one thing that I wanted to point out is that there are other stablecoins that have failed in the past. And some of these you may know of if you've been in the crypto space, some of these not, but I just wanted to point some of the others out. So I pointed out the UST, the Terra Luna stablecoin, but there are other ones as well. There was this Iron Finance token. Mark Cuban was really touting this DeFi protocol, Iron Finance, one time, and they had a stablecoin, and it was an algorithmic stablecoin, and it depegged, and that whole exchange went defunct. And then there was another one, Akala USD was a larger one that came out last year. That one went defunct as well. And so there's been at least 23 different ones, and you can go to chainsec.io if you want to see some of those other ones that have lost peg and just died out, or they might have got hacked. The protocols might have been hacked, or there might have been some flaw in the code and they just lost all the money. But stable coins, I have this title here, Stables Ain't So Stable, because stable coins are, one, depending on the reserves that these stable coins have. Some of them use this algorithm, to try to maintain a peg, and there hasn't been one that's worked. All of the algorithmic stable coins have failed. But even the ones that are over collateralized or collateralized 1-to-1, they still have to have access to the funding. So just like a bank, if the bank doesn't have the money on hand, then the bank is going to go defunct. And that's the same thing that's happening with these stable coins. And again, just a good old bank run. That's what happened with Circle. This is a breakdown. This is a little dated here. This is from 2021, where Circle released their USDC reserves, or what all is in the 1-to-1 what maintains the peg. And most of it is cash and money market funds, but they have US treasuries. So, it's got some bonds in there. Commercial paper is basically like company loans that are in there, corporate bonds, some CDs. So this is a breakdown of what's in Circle's reserves. And so if they can't get access to any of this at one time or another, and people are steadily pulling their money out, then that is going to also cause a depeg. And because of that, Binance, Coinbase, other exchanges have also decided to just lock down their withdrawals. Now, I have these screenshots here. This is actually screenshots from my phone. So I was trying to do some exchanging, out of USDC, out of that stable coin to other tokens, or to either move it around, and you just couldn't. So there are still ways to do it. You can do it in DeFi. You have to go through some steps, but the liquidity pools are dried up. So this year was through MetaMask, and I just couldn't swap out of it. It was just failing because the liquidity pools are dried up. This was on crypto.com. It's not even allowing deposits because they know that if they take deposits, people are going to try to trade out of it. So this is what happens a lot of times when there's basically when the wells start to dry up. Now, this happens in crypto, but this happens in banking too. If you remember in the '08 recession, in I believe it was Greece, in Italy, there was some problems with people getting money out of the bank. And then you've seen some of the things that happened in Nigeria recently with some of the cash issues that they're having there. So these things happen. Is very pronounced in crypto, and this is the news. But don't get it twisted. This is a banking issue. This is a global banking issue that's happening, and crypto is always a canary in a coal mine. It always hits crypto hard and hits crypto first, and then you start to see it play out in other areas. And there's a lot of sell pressure on top of it. So just to make matters worse or scarier than they already are, there were already some things that were out there that were causing sell pressure, and some things that are on the horizon that will cause further sell pressure. One of those things is the Mt. Gox release. So Mt. Gox was an early exchange from way back in the day. This was like the only place that you could exchange Bitcoin other than doing it over the counter. But Mt. Gox, they are going to start releasing the Bitcoin and reserves that they have to people that were in bankruptcy. And this is like 9 years. So some people are getting like hundreds of thousands of dollars. And so a lot of people are going to sell, especially in this environment. If they need that money, people are going to sell. Celsius is starting to allow withdrawals on their custody accounts. They're going through this long bankruptcy process. Voyager, Binance US bought Voyager, and they're going to work out giving money back to the customers that lost money on Voyager. And then the SEC and the US government has a number of things that they're doing right now from a regulation standpoint. So people are calling it, I don't know if it's the official term, but choke point 2.0 is what's being thrown around a lot. And it may not necessarily be something nefarious that's going on that the government is doing, but they're definitely clamping down on any exchange, on any blockchain company, any protocol or project that may have done something that they feel as either a securities violation, or if they did something not in a manner that would be to protect the consumers or forthright, then they're clamping down the on and off ramps. So ways that people get into crypto and ways that people get off into crypto. So if you choke off the banks, then crypto is going to eventually dry up. So there's a lot of exchanges that are being hit with subpoenas and lawsuits right now from the SEC, not only the SEC, but the CFTC has come out and said that, Ethereum may be a commodity. And there's these opinions that are coming out that these exchanges over here may have broken some rules. And then there's something that has been proposed from the president's budget, or his office's budget, where they're planning to possibly tax Bitcoin mining at up to 30%. So starting at 10% a year and ramping it up all the way up to 30% on Bitcoin mining. And so there's a lot of things where people are being concerned. A lot of institutions are saying, well, maybe we need to unwind our crypto positions. And last but not least, and this is not an exhaustive list, there's a lot of other things that are going on, but the Shanghai upgrade is on Ethereum. And this will allow people to unstake and withdraw some of their staked Ethereum that they have done prior to the merge. And so some people are going to unstake and sell. So we have all these things that are either happening now or will be unwinding over the next few months that is going to cause a lot of sell pressure on the market. So all of this is all intertwined with the banks that are folding up, with the FTX stuff, with the stablecoins depegging. All of this is all tied together. And I have this Twitter note up here from Senator Bill Hagerty, and He's just talking about the Operation Choke Point 2.0. So if there's a silver lining here, there are people, some senators, Congress people that feel like what the government or some of the regulatory bodies are doing is not the way to go about it, because between taxation and over regulation, you might actually drive adoption and innovation out of the states, and we'll have to buy it from somewhere else. So that's not necessarily what we want for those of us that live here in the States. Now, this slide I have here is titled "Been There, Done That." And I say that because I've been in this market in the crypto space since 2017, and I've seen where exchanges lock up and where crypto falls apart, and where stable coins depeg as well. So Tether has depegged a number of times, and it is the largest stable coin in the world, and it depegs, and it has gone down to 90 cents on the dollar and has gone back up over time. So I've seen this before, and I've seen Bitcoin, as you can see this chart here, lose 70% of its value in a matter of months. So I've been here before, and hopefully that gives, for those of you that are thinking about coming into the space, or those of you that are in the space, or if this is your first time experiencing anything like that, hopefully it gives you some type of calm about what's going on. I have to remind myself of these things as well, because it's scary for me as well to think about the fact that your tokens will be going down 70% and stable coins are not so stable. These things are very scary when you think about it. So that hopefully that gives you some sense of calm. Now, this I'll bring up Hunger Games. I'm bringing this up because a lot of stuff that we're seeing right now that's happening in the crypto space, between all this tight liquidity, between the stable coins depegging, with all of the hacks that are going on, the crazy stuff that's happening in DeFi. Bitcoin was born out of the 2007, 2008 recession. So the great reset, not the Great Recession, but the recession of 2007 and 2008. Well, it is called the Great Recession. I was mixing up with the Great Depression. So the Great Recession of 07 and 08. So Bitcoin was born out of that. So in 2009, Bitcoin emerges out of that as a result of what happened. And it's supposed to be the permissionless, the trustless system, totally decentralized. But what has happened over time is that the crypto markets has basically just repeated the very same thing that it was not supposed to do. So this stuff that's happening with the stable coins depegging, with there not being access to liquidity in the crypto markets, is because of, excuse me, all of the counterparty risk that has existed. So we have banks that are borrowing and lending to other banks, and those banks are borrowing and lending to other banks, and so on and so forth. And that's just in banking, but the same thing is happening in DeFi and in the centralized exchanges in crypto. So they're borrowing from one another, and people that are degens, it's the same stuff. You borrow from one exchange to lend to another exchange, and then you borrow from the exchange and you lend to another exchange. And so it's this big circle that's happening between individuals and these crypto companies, and they're just doing the same thing that they were not supposed to do. This is not supposed to happen in crypto, but this is where we are, and capitalism it just will feed into anything. It doesn't matter what it is. It doesn't matter what utopian idea that is birthed. Usually greedy, and I don't want to just say capitalism, because capitalism is not bad. Capitalism is not, it's immoral. But just greed, I should say, greed will filter its way into things. And I have this picture up here of the Hunger Games, because I don't know if any of you seen the third Hunger Games, where the people overthrew the Capitol, and then they wanted to sell the kids into the Hunger Games, or they wanted to put the Capitol kids into the Hunger Games. So the people that were fighting for their freedom from the whole Hunger Game system wanted to subject the people into the system that they just got out of. And if you don't know anything about Liberia, and I'm not trying to be political here, but if you just do a little research on the whole African-American Liberia experience, and what happened when the African-Americans went to Liberia and what happened, you'll see this thing where people get to a certain point and then they subject others to what they were escaping from. And that's what happened in crypto. People got rich and they got greedy, and they started to repeat the very same things that they were running away from. So tangent there, like I said, trying not to be political, but just trying to give some context. And again, this may be just a 08 recession reloaded. So this is tied to mortgage rates. It's a little different because mortgage rates were going down during the 08 recession, but a lot of the same tools are being used with the derivatives, with the lending, with the practices. We just didn't learn our lesson. And so something to study in your own time. Another thing that's going on is that, and this is adds onto the sell pressures, that inflation is just stickier than a lot of us knew how sticky the inflation was going to be. But, at one point they said this inflation is transitory and this inflation is temporary. But I mean, a lot of us knew that was not what was going to happen. And so this pause that was supposed to happen, maybe it'll happen with all the stuff that's going on with the banks. But, for a minute last week, there was a push out to how long rates were going to stay up. And then the next fair raise was supposed to go from maybe 25 to 50 basis points. And maybe it's starting to come back down. We don't know what's going to happen with all this. But long story short, inflation is going to be around for a while. Jobs are hot. People are still spending like crazy. So it's going to stick around. And because of that, it makes borrowing for crypto companies more expensive. And therefore, they're going to continue to sell their Bitcoin that they're mining in order to keep the lights on. And so all these things just add to the sell pressure that's out there. And I know I'm saying the same thing over and over again, but it is what it is. And so it begs the question, is cash still king? Is it king-ish? And I say king-ish because the dollar has lost value over time. And this chart here, you can look this up from the Visual Capitalist, but the value of the dollar has just lost steam over time, and there's all these events that's added to it. However, the dollar is strong when you compare it to other things. So I guess it depends on the context that you're looking at it. For a lot of people, they're just like, I'm just going to go into cash and just sit on the sidelines until all the stuff blows over. Is that the best thing to do? I guess it depends on where you are in your life and in your investment strategy, but maybe not. So I'm going to pause there. I know I said a whole lot. I wanted to maybe bounce some ideas off of Suzanne and see what you thought about all of my ranting there.
There. All right. I was like, I can't see myself. Yeah, so that's, I think that, just one second. I wanted to put it side by side, but it's not letting me. So yeah, I think that there is, that at the moment, there's a lot going on with, in the markets. And one of the big things that I think is really important that we often, well, not that we often forget, but that we haven't had to experience for so long because we were doing this quantitative easing forever, is that banks were able, were taking on okay, I'll back up. Because of everything that happened during the Great Recession, leaning forward, and then what happened with Lehman Brothers and learning that banks had been so over leveraged, we brought in a lot of regulatory pieces to keep banks from being over leveraged and making sure that they were capitalized to avoid these liquidity issues. And so the big aspect was that, banks started having greater regulations on what they could hold their cash in while they were holding basically people's deposits or holding corporate funds. And during 2020 and 2021, all of those kind of like the securities, the treasuries, the mortgage-backed securities, bonds, their rates were so low that, as all this stimulus was going out into the public and people were starting to make money, weren't spending as much money and people were making money in the stock market and this and that, deposits at banks were skyrocketing, and banks really didn't have a good place to put that money besides whatever their the legal instruments were. And so, banks like Silicon Valley Bank, looking at when you look down into their deposits, where they were actually holding their treasuries, they had these really long duration treasuries that were now trading at like 77 cents to the dollar. And that's because, back in 2020, 2021, treasuries didn't have a yield. So, they had a very, very low yield. And because of that, banks were looking for treasuries that had a longer duration. So they didn't want to get things that were like, 1 year bonds or something. They had to go out to like the 5, 10, 15 year. But those were getting such low rates of return that once bond yields started to skyrocket, all of those treasuries that banks like Silicon Valley Bank were holding, even JP Morgan and others, all of those treasuries they were holding, they have them on their liabilities sheet as hold until maturity. And so because of that, they technically aren't taking any losses on those treasuries. But the problem comes in when you have a lot of pressure from people taking cash out. And so, it's illegal to push people into bank runs. It is considered criminal to tell people, oh, hurry up and get your cash out. And so a lot of the venture capitalists that were afraid of meeting payroll, were pushing to get cash out of Silicon Valley Bank. And the problem is that they didn't have enough cash on hand. And so what did they have to do? They have to start selling these poor priced treasuries. And because of the fact that we're now in this quantitative tightening cycle, the right institution that should be picking those up, because of the fact that they are poorly performing against these new higher rates from the Fed, but the Fed actually isn't buying or rolling out treasuries. They're not active in that space right now. So their number one customer has now just disappeared. And who wants to hold these bonds? They're not performing. And so they're, if you have to sell now, the bonds that you had from 2020, they're like, 15, 20, 30% below whatever you paid for them. So you capitalize a massive amount of loss really quickly to get cash to those who are trying to pull out liquidity from the market. Now, again, because Silicon Valley Bank they had their tech facing, private equity facing, venture capital facing, there was this kind of moment where, everything that you've just shared, it is exactly it. You see that all these kind of air pockets of instabilities. And it's like that saying that it's not the it's the ants that kill you, not the elephants. Because when it's like one massive thing, you kind of know how to just, spearhead it. But when it's all these small pieces that are fragmenting the system simultaneously, then, banks just didn't have the resilience to be able to respond to the amount of pressure on them. And so that's why we saw the Silicon Valley Bank, basically the FDIC had to step in and they went into insolvency and they were looking for seller this weekend. And now the question will be, how many other banks are going to start facing this issue? Now, normally when the Fed doesn't step in, there are these like home loan federal banks that should lend liquidity. They should come and like step in as the stopgap. But there are a few banks like Silicon Valley Bank that have basically tapped out their liquidity request from these home loan federal banks. And so that means that actually the stopgap isn't going to be there because it wasn't there for SBV or SVB, and it might not be able to be there for is it First Republic Bank and some of the others that are now kind of in the cusp of a similar feeling the pressure, I should say. And I think that now, there are a lot of banks that can cope through this. So this is not to scaremonger anybody or to say that like the financial system is about to like implode, but there's definitely going to be repercussions because now others that are feeling insecure about their financing or the structure of their financing are going to, try and figure out like what they're going to do with their banks. They don't want to be in the same situation as those that had lines of credit with Silicon Valley Bank. But banks themselves are going to, the management are going to have to figure out what they're going to do with all of these trash bonds that they're holding that are underperforming. And that is the point where the Fed will likely have to do something. So Monday, they will have to give some kind of response. And some people think they're gonna start pivoting now. I think that would be, with everything going on with inflation, that would be a really going completely the other direction. I think that what they will have to do is probably they'll have to do some kind of deal with the banks to help them get those negative performing bonds off of their sheets. And so they're going to have to do some kind of deal that they'll let them get out without a haircut so they don't have to capitalize such significant losses, but that they can move into better performing bonds. But now that goes back to the issue that the Fed then is in basically pulling forward the fact that they're rolling out a lot of debt into much higher interest rates, that if people take those high interest rates for significant duration, then then that just compounds the repayment of those debt structures. So then we go back to the same problem that the Fed is trying to fix. So I think that it's one of those things where, you can't do something like quantitative easing for how many years and then go into this heightened state of stimulus during COVID and then expect that you can unwind that process with such rapid interest rate hikes. It's just been a lot really fast. I mean, it's funny, we haven't even hit the 1-year anniversary of when we started rate hikes, nor have we hit the 1-year anniversary of quantitative tightening started much later. So, there's a lot of bubbles in the system, and it shows that, when you look at crypto by itself, there's a lot of vulnerabilities. And then you look at the banking system, and there's also a lot of vulnerabilities. And then when you layer those two things together, it really looks like maybe not like two semis heading into a car accident, but one of those car accidents where everybody was just driving too close together. And so you're getting these kind of stacking impact of vehicles. And the Fed is going to have to do something to put people's minds at ease. I don't think that they're going to want to do something that basically unwinds everything that they've already done. Because the reality is that, like you said, the labor market is still hot. Equities are still extremely high. But this could actually create a lot of volatility in the market. And if volatility starts, if we see the VIX, pumping back up towards that 24 point and above, then we will see a significant pullback in equities, just as a relationship to volatility. But we did see a really big, massive drop on, last week, Thursday and Friday. So it's possible that on Monday, people will kind of come out, be a bit calm, and want to hear what the Fed has to say, because I think a lot of people will expect that the Fed is going to have to do something, that they just can't let, like bank and other banks start to implode, because that will create a catastrophe for the financial sector. So it's a lot, it's a lot to say. But what's also funny is that, or not funny, but with crypto, there's there's more of a common standard, I guess, when you look globally, like what Bitcoin is in the US, what Bitcoin is everywhere else. And so these kind of there's a kind of a common standard then globally. But one of the funny things about bond yields and treasuries and bond duration is that in Europe, most European countries they really set really long duration bonds. So their governments took out like 30-year bonds at these zero rates or even negative rates. But the US didn't do that. Most of their treasuries were very, very, very short duration. And so that's why the US now is going to be one of the first countries that is going to have to start rolling out treasuries and debt into these higher rates, where a lot of European countries won't have to do that. Like Austria, all of their debt is like all of their bonds are like 0%. So they don't care that the bonds are trash, but it means that while the central bank is increasing the rates, they don't have any debt to have to roll out into those increased rates. So they've bought themselves a lot of time. On the flip side, banks in Europe are still able to make money because mortgages in Europe are usually not more than 5 years of a fixed interest rate. So you constantly have people that need to roll out debt. And so banks are able to make money, changing the mortgages or other bank instruments. And it does put more pressure on individuals in Europe because they could be rolling out debt into these higher rates. But banks have an opportunity to make money somewhere else that isn't in the treasury. And right now, who didn't roll out their mortgages in the United States to the longest potential duration at almost a 0% rate? So even though a lot of banks took on a lot of mortgages, they didn't make any money on them. So you have these institutions that need to make money. I mean, they are financial institutions. They need to find a way to pay people interest, pay their structure, and yet they have zero mechanism to do it because we've pumped everybody onto these very low interest rate, lines of credit, business loans, mortgages. And then on the flip side, your treasuries are paying almost nothing. So, it's like, even though, a lot of people feel a deep sense of security because of the fact that they're not going to be maybe so directly impacted by these higher interest rates, but it also means that it makes inflation much stickier, because the things that interest rates will impact don't have that it's much more lagging because there's so much debt that's been refinanced into almost zero rates. So I think that what's happening in the US when it comes to the banking side will be very unique to the US. And I think that on Monday, we're going to have to see some significant data points from the Treasury, from Fed Chair Powell, from the FOMC members. We're going to need to hear something that will help kind of ease our minds that they're really taking this seriously, so that it doesn't become just a knock-on effect. And I think that Powell has been so used to calming markets by giving like these dovish tones, but I think now he's going to have to be much more direct and how they are going to protect banks while they continue to fight inflation, which is not going to be an easy task, but we need to hear some of those things. So, that's all of this that's happening in the crypto space is like happening all at the same time, what's happening in this banking sector, and they're interwoven. So it's interesting to actually see, as you were talking, I'm like, it's amazing. Actually, some of these stable coins have been really quite stable in spite of everything that's going on, and that the market, even though there's been halting on the platforms, but just generally that there's still such a presence of what crypto is that you still see politicians debating it. Because if crypto was going to be nothing, if it was just going to implode in its entirety, you wouldn't have these public debates between politicians about how do you regulate it, how much should you regulate it, how do you tax the energy costs or not tax energy costs, and so it does continue to prove that in spite of everything that's happening in the banking sector and everything that happened with Silvergate and FTX and all the other fallouts in the crypto space, that this is a technology that like you said, we want to keep it in the States. We want to regulate it so that we can adopt it in a normalized and safe manner that protects citizens, protects their dollar or their capital, but doesn't pull us away from innovative thinking. And so it demonstrates that actually this is, even though everything that could have gone wrong has seemed to go wrong, but the viability of it is actually still there. And so it makes it even that much more urgent for us as traders or investors to keep abreast of what's happening. And so that's one of the reasons why I'm just so thankful that you come and you share with us, because if this thing was going to implode, it would have, and it didn't. So we need to stay on top of what's happening in this space, because eventually adoption will hit that point where if you don't know what you're doing, you're going to feel like, you're going to feel like people who maybe didn't learn how to use the iPhone when it first came out. Well, now they're using the iPhone and the iPad. You don't want to be behind the times, especially if you're going through such a tumultuous period in the economic market. So I know I've said so much, but yeah, I think that those things were important aspects of what's happening, because it's amazing. Bonds, bond yields, and like foreign investors, the crypto space, and US banks are like suddenly all married to each other, but we weren't invited to the wedding, but we've all suddenly showed up here. And so it's good to keep pushing ourselves to learn new technologies, because it's important. We'll all be faced with dealing with it eventually, especially since we're seeing, it didn't implode. It's here. So it shows its strength and its staying power. So
Absolutely.
You have more to share, so I will pass the mic back to you.
Okay. Yeah, no, that's great that you shared a number of those things, because yeah, it is all interwoven. And what a lot of people are finding out the hard way, unfortunately, as investors in crypto, is that crypto is heavily tied onto the macro environment, not only here in the States, but globally as well. So now you're forced to learn about things like bond yields and bank reserves and all these different things that you're like, well, I'm just here to make a little money on crypto, but you have to be aware of how all these things work, because your stablecoin is tied to all these things that you just talked about. And I'm wondering, even out of this experience, if at some point will there be like an FDIC for stablecoins here in the US or wherever the stablecoins originate, because there's something that's needed. There's really nothing that currently exists to serve as an FDIC for stablecoins. So I'm wondering what's going to come out of it. So yeah, I'm going to.
Yeah, that's actually a really, really good point because, with everything that's happening with, Silicon Valley Bank, the thing that puts investors' minds or those that have bank deposits there, puts their minds at ease is the fact that, on Monday, if you had, anything under $250,000, the FDIC will, will return those funds. And so, and the FDIC is amazing. I mean, considering since I think 2008, they've, without a hitch, they have closed very calmly and peacefully like 500 banks and merged them and or sold them, but that they didn't have problems with any people with bank deposits because they, were able to honor their commitment as an insurance agency. So yeah, if something like that could be developed, I think it would bring a lot of peace of mind, but it would then require a lot more regulation.
Absolutely. Absolutely. Can you still hear me? Because I had to turn my
Yes.
video off because my camera is acting a little funny for whatever reason. But all right, can you see my screen?
Yes, I can hear you.
Okay. All right, and you can see my screen?
Yes.
All right, all right. So despite all these things that are going on, the crypto market is still moving. The space is still having a lot of development. So where do we go from here? Now, one thing that people started to do was to take advantage of an arbitrage opportunity. Now, this is very high risk, but that chart that we looked at earlier, you can see that the stablecoin or USDC, for specifically what we're talking about, it went down to about 88 cents at one point. So some people went ahead and bought USDC because they were like, well, we know that at some point it's going to go back up to this dollar. They believe in the USDC because it's backed by Circle, BlackRock is tied into it. So a lot of people are just thinking that, well, there's no way that this bank is just going to, or USDC is just going to go kaput. So some people went ahead and bought USDC, and some people are still doing that. And that's one reason that it's gone from 90 something cents, 91 cents earlier today to 95 cents. And it may go back up to $1. So there might be some opportunity there. It's a high risk trade. I am not suggesting that anybody do that, but Coinbase has come out and basically said that we're pausing in order to make sure that people can be whole come Monday or whenever they start to allow redemptions back on the USDC. So some people are taking advantage of it. Some people are going about it in roundabout ways, going into another stable coin and then trading back. There's a number of different things that I've seen, but that's for people that have a high risk tolerance. Now, I wanted to talk about something that I've done over the past few years, is gone different places in the world to see how Bitcoin and crypto is used in different places, because some people will say that Bitcoin is an inflation hedge. Some people will say, no, Bitcoin is Bitcoin. It's too volatile. There's no way that it's an inflation hedge because you don't know what it's going to do from day to day. So what I find out is, depending on where you go in the world, it can be and it may not be. So in a place like in the US, a lot of places in Europe, even in some of the more stable countries, or the countries that have a more stable currency, like Costa Rica. And I bring up Costa Rica because this is Costa Rica's inflation chart over the past 10 years. And they had this spike here, but it's lower than it's been in the United States. And I went to this restaurant here. So if you're ever in Costa Rica, in San Jose specifically, they have something called Bitcoin Jungle and El Calle Jean. I highly recommend going. Camilo's the owner. He owns a couple of places, but really good food, but they accept Bitcoin. And I asked him about his experience with it, accepting Bitcoin and if people use it. And he's like, not really, because, we pretty much use the dollar. Our local currency is pretty strong here. So compare that to some other places where inflation has been a little more rampant, a little higher. So I'll use Turkey, for example. So they had a pretty bad route with inflation going from 2020 to 2022. And you can see that it got upwards of over 85% at one point. And so the US dollar was very strong to it. And I went to Istanbul, and I was surprised to see just the number of different places that took crypto and exchanged crypto. And just talking to some of the people about the experience that they have as locals to Turkey with Bitcoin and some of the other currencies. You see Ripple and Ethereum up there, but they have these exchange houses, and you can exchange crypto into these local currencies. And I mean, it was all over the place. These are just some of the pictures that I took, but all over, they just had these exchange houses. And I'm like, man, they don't even have this here in the States. So there was a heavy adoption there because people were like, well, I'm going to spend and use these, either the cryptocurrency itself or use it to trade in and out of the lira there. So I found that to be very interesting. All right. And then some of the stuff that I found out at a crypto conference that I went to, ETH Denver, specifically, is that there's just a lot of growth. And I want to spend some time with that. We talked a lot about all the negative things that is going on in the space and all of the sell pressure, but price does not equal value. Value does not equal price. So at one point, Amazon was 90% down. Uber was several tens of it was down real bad. I think Uber just became profitable. I don't know if it even is yet, but some of the largest companies in the world were not profitable for a very long time, and then they became the most dominant thing in the space. So I went to this crypto conference, ETH Denver, just a couple of weeks ago, and there's a lot of building that's going on. Some of these companies that I have up here, Coinbase has a new layer 2 that they just put out base. There's a race for ZK EVMs that's all over the place. Spotify is testing out NFTs. And there's something called EIP 4337, which is a smart wallet. And it's one of the things that I'm really excited about. So smart wallets basically are wallets that are more intuitive, that are easier for people to use. So right now, like MetaMask and a lot of these wallets, you have to have your 12 or 24 word seed phrase. And if you lose that, you lose your crypto. You have to keep up with these private keys. You have to sign these transactions in this code that you don't even know what the code says. So it's just not easy for the average person, but smart wallets through EIP 4337. So that's just a proposal on the Ethereum chain is basically going to allow for a more sleek experience, like using a PayPal to check out, or like you would see with bill pay with your local bank. So I'm really excited about a lot of the development and the building that's happening. And then Chainlink is one of the heavy hitters in the blockchain space, and they have partnerships with a lot of crypto and blockchain companies, but they also have a lot of partnerships with companies that are outside of the crypto space. And I really want to emphasize that, because some people don't believe in the idea of blockchain being used as a service for a lot of the things that we're going to be doing. But the whole idea is for people to use blockchain and not call it blockchain and not talk about blockchain, but it's just on the back end of protocols that we use on a day-to-day basis. So Chainlink, they partner with thousands of different companies, but Oracle, I'm sure you heard of them if you're in the tech space. Google, you might have heard about that company. And Swift is, if I'm not mistaken, the largest processor of cross-country, cross-continent bank transfers in the world. So they do a lot of settlements day to day, and Swift is using blockchain to make their processes more efficient. They're building out some things on blockchain as well. So there's a number of different companies that Chainlink partners with, the Weather Channel, all kind of different companies to provide price data on chain. So just wanted to point some of those things out. And then this is another thing that might be a high risk, high reward trade, or it might be high risk and you lose everything trade. But there's a lot of lawsuits that are going on right now in the crypto space. There's one with Ripple XRP that everybody in crypto has their eyes on, because we're trying to see if Ripple will be determined as a security or not. And that means a lot for the rest of the space. And the same thing with this Grayscale spot Bitcoin ETF conversion. So right now, Grayscale has a futures ETF that's allowed, and there's been arguments that have been going on back and forth, but a judge has been really skeptical towards the SEC recently because they're saying, well, how can you allow for a futures Bitcoin ETF in the United States, but not allow for a spot ETF in the United States when they're correlated 99% of the time? So how is this protecting consumers one way or the other? So I have no dog in the fight with that. It doesn't necessarily matter to me one way or the other. I feel like if you want Bitcoin, just buy Bitcoin. But some people are thinking about buying the Grayscale Bitcoin Trust or GBTC shares in order to take advantage of this discount. And basically, if at one point it was over 50%. So basically, if you bought it now, they're thinking that if it's converted to a spot ETF, then that gap will close. So you're getting basically 30% more Bitcoin if you bought it, 35% more Bitcoin if you bought it at this price because of this discount here. But again, that's high risk, high reward. I repeat, I am not telling anybody to do that. I'm not doing it because the GBTC has a 2% expense ratio on it. It's a little too high for me, but that's what some people are doing. And some important events just to keep track of. One of the questions that Suzanne had for me last time was, what are some of the things that people look at in the crypto space and the blockchain space to keep up with or to use as different times where the markets may go up or go down? And one is just the macro environment. So just like traders will use reports about inflation, Fed fund rate hikes or lowering. We use the same thing. So we're actually looking at the same data points. We're trying to see if the Fed is going to hike or lower rates, because that either is going to determine how high or low the markets may go. Jobs reports, all the same things that you're looking at from a macro standpoint. We're looking at the same things, but specifically when it comes to crypto, the halving, on Bitcoin's chain is something that happens every 4 years. So basically, it gets a little more difficult every time any new blocks on Bitcoin are created. The algorithm gets a little more difficult, and basically the rewards are cut in half every 4 years for a new block. So right now, if I'm not mistaken, if a miner gets the reward for a new block, they get about 6.5 Bitcoin. So in 2024, that's going to go down to 3.25, and then 4 years after that, it's going to go down to 1 point something, and then every 4 years after that, it's going to continue to go down by half of that. And so the equation gets harder to mine more Bitcoin, the hash rate gets more difficult, and therefore the rewards are lower. So that's something that we look at. And usually, if you look at this chart here, there's a lot of price action that happens around halvings and going into halvings. And so people kind of use this as a predictor of what's going to happen at the next halving. Who knows? But there's probably more than like I would bet on diminishing margin returns as we continue to go forward. And then Ethereum as well. On Ethereum's chain, we're looking at these upgrades. So I mentioned Shanghai upgrade is coming pretty soon. That's supposed to be on schedule for next month. But sharding is what Ethereum is working towards. Basically, they're just trying to make the blockchain faster by adding all these different layers of upgrades. And so this is a multi-year process. So as Ethereum goes through these upgrades, it does drive a lot of excitement, a lot of price action around what's going to happen, because either people are going to lock up their Ethereum or Ethereum is going to come out into the market. So we look at those things. So just some final thoughts that I had about what we talked about today and where we are in the space. One thing that I want to mention is that a lot of the stuff that's happening in the crypto spaces is in beta form. So at the conference that I went to at ETH Denver, I'm talking to all these devs, I'm talking to all these founders of these projects, and they're like, yeah, go out and use our testnet and test this out and test that out. And I'm like, people need to realize that for the most part, a lot of the stuff that we're using is test software. Now, yes, a lot of it is the final versions of it, but even with Uniswap, which is the most used DeFi exchange, it has gone through several versions. So now we're on V3 with Uniswap, but all of these things are still being developed. There's always these proposals that are happening. There's a lot of governments and voting that's happening on these different blockchains and these different projects. So we have to realize that this is software that's being tested out in the public. And I don't think this has ever really happened before. So Suzanne and I were having a conversation offline before we came on here a few days ago. And we were just talking about the iPhone and the iPad. So just imagine that Apple came out with products and they said, you know what? This product is not finished. We want you to test it out for 5 years, and then we're going to release the final version. Well, that's what's happening in crypto. The same thing with the internet. Just imagine in 95 or whenever you got on the internet, and I was on the internet very early in the mid 90s, and it was nowhere close to what it is now. But just imagine if AOL or Netscape at the time was just like, okay, this is the very first version of a product that we have. It's not finished. Here, use it. Just use it and try to break it. And if you lose your money or if you get hacked in the meantime, then that's just a risk of you using our technology. But that's where blockchain and crypto is. So it's very early, and people need to realize that as they're going in. So I will say that it's not for everybody. At one point when I first got into it, I'm like, everybody needs to invest in this, but I have since changed my whole theory around that. And everybody should not be invested in crypto. Everybody will probably be using crypto at some point, but everybody should not be an investor in this space. It's very risky, and it's for people that want a high reward on the back end. Price does not equal value. So yes, the prices are down now, but there's a lot of development activity. And last but not least is heavily dependent on the macro environment. So what's going on in this global economy is going to heavily impact what's happening on chain and happening with the space. So if you plan to invest here, then you need to keep up with what's going on in the macro environment, a lot of the things that Suzanne covers. And I tune in to the Trade Speakeasy channel on Telegram and things that she's talking about, because these things help me to better plan on when I'm going to buy my next tokens. So that is the end of my presentation there. I'm going to stop my share there. And let me see if my camera will cooperate with me now. I've been going in and out and freezing. I hope my audio hasn't been freezing.
No, not at all.
Oh, okay. So it's just my camera. I need to figure out what's going on. Maybe I need to upgrade my laptop or something. Who knows?
Well, that was extremely informative and really helpful. And like I said previously, we're in this kind of phase where, it still feels like you're saying, you can feel that a lot that is in the crypto space is in that like beta testing phase. And you can feel that you're kind of a guinea pig, but the reality is that it is something that has staying power. So, we have to, like you said, not everybody needs to actually invest in crypto, but you need to know what's going on. You need to stay informed. And so as Winston shared, we have the Trade Speakeasy Telegram where, both Winston and I engage with our members. So if you want to be part of the Trade Speakeasy, you can join our newsletter at tradespeakeasy.com and learn more about the different classes that we have. And you can join us here monthly for this kind of ongoing chat between, global macro and what's happening in the crypto space and blockchain. And so, if you want to find out more about what's going on, if you want to hear when we have our, next meetings, and of course, you can always like and subscribe to the channel, and also go over to MetaRise's YouTube channel, because they also have a lot of different videos and interviews and conversations that they have with other people that are well informed specifically in the crypto space. And I've also found that informative. And if you are looking to like really do a deep dive and learn more, or even, figure out how you want to give yourself exposure in the crypto space, Winston does offer one-on-ones. So if you want to, just, have a deep dive and have more, that time to really ask all of your questions in one go, then you might consider also doing something like that. But thank you again, Winston. As I said, brilliant. And thank you so much for sharing. Every time when we talk, somehow I feel even more convinced about where crypto is going, even when others think that it's all just a scam, it's all going to disappear. And there's always those feelings of trepidation. But like I've been involved in the space for a very long time. But even with me, sometimes I'm like, I still don't always feel like I know enough. So having the time with somebody that has such expertise gives a deeper feeling of confidence in like where the space is going. And yeah, not everybody has to invest in crypto, but you should stay informed. So for those who are joining us now or later, thank you so much for your time. And thank you, Winston, for keeping us updated.
Oh yeah, you're very welcome. These talks are actually good for me as well, because when I'm going through my research and even going back, just looking at what happened back in 2017 and 18, it helps me to just say, all right, we've been here before. These things will work out one way or the other. Yes, the sky is falling chicken little, but it's this is just investing. It goes up and it goes down. But yeah, it's always good to bounce ideas off of somebody else, and you being an expert in your space. And yeah, it's refreshing. So it's good for me too to be able to talk about it.
So thank you so much again, Winston, for sharing with us. And if you have any questions, hop in the chat, leave your questions, or hop in the Telegram. And yeah, we'll be doing these conversations monthly. So let us know what you want to hear about, because we can pick the topics as we go on, but hearing from you, knowing what's of value and of interest to our members and our viewers and our audience is really important to us. So I hope that you guys all have a wonderful Saturday evening. Yeah, it's still Saturday for you guys. It's Sunday for me in Germany, but I will say goodbye for now. Thanks again, Winston.
Thank you.